is Rolando Fori, aka the Corporate Nossi Guy. So in this episode, we want to have a conversation about fintech and its evolution in Africa. It's amazing how it has shaped the way we do things, how we transact, how we interact with one another for the past 5 to 10 years. To help us understand the world of fintech and its evolution with respect to Ghana and Africa as a whole, is a good friend and brother, Arnold. Arnold is the CEO of Jumo. So if you are ready, let's get nosy.
I like to describe myself as somebody who is in technology and trying to see how we can use technology to provide more financial products to the ordinary person on the street. My career comes from traditional distribution channels, whether it was insurance, whether it was in banking, or it was in consumer finance, whether working in Ghana, working in East Africa, or Southern Africa. My background is mostly being how can we use technology, how can we provide more quality products and services to the ordinary person. So when people think about fintech, I think the reference is often just with regards to finance and then the technology aspects of it. And this means different things to different people, depending on what they're actually interfacing. But it's a broader remit. There are people that are involved in agriculture technology, which would be agri-tech. There are people that would even be involved in ID and infrastructure kind of like technology, but aimed at supporting people within that environment, within that ecosystem. And so fintech primarily it's about financial technology. And financial technology is how can you use technology to deliver financial services or to make the experience of using financial services better. So depending on where you're looking at it, fintech is actually a broader realm. It started off with technology companies basically trying to provide services to established financial institutions. So whether it was banking, whether it was insurance, whether it was in brokerage or whatever financial services. And then as time went on, we began to realize that you could actually disintermediate some of these traditional providers. So we started off with something like in Ghana, for instance, people would mostly talk about aggregators. Aggregators are people that if you wanted to do a transfer across different banks and that technology didn't exist, you would often go with whether it was an XPay, it was an Slide Pay, or those other aggregators. You would often go through them to be able to send transactions across the board. There are also cross-border transfers that fintechs enable. If you go through a traditional banking service, sometimes the cost is a bit prohibitive, and then the KYC requirements, the AML requirements are a bit prohibitive. And so most people would prefer to leverage the seamless and ease of use of fintech technology. And so when it comes to fintech, it's an evolving phenomenon. It cuts across different areas. We're still yet to even fully map out the realms in which fintechs can operationalize. But the fundamental thing is wherever there are financial services products and wherever there is an opportunity to either make it easier for people to access the service or to reach new segments, so solve for reach, which again, and maybe to illustrate that point better, mobile money is an example of fintech, primarily because it solves reach. It leverages on existing infrastructure, which is the mobile telephony, and as a result of that, it solves a reach problem. Now you can build on several other services or products on top of that, platform, and that also still constitutes fintech. So it really depends on how you're looking at it for you to properly situate what fintech is. So I would say there are 3 primary factors that are required. One is the technology viability. In other words, that you have the right technology to address the problem. You can maintain uptimes. You have the capacity and So whether you're using cloud technology or whatever, very efficient, because the key thing with fintech is like you want to process things very quickly, and you are mostly processing large volumes. So you want a platform or a system that can support that kind of transaction. So your technology has to be on point. The interface of that technology has to meet, the user interface of that has to meet the needs of your target audience. Then in terms of the backend support structure, that also has to be very tightened up so that the interface between the activation, where the customer really comes into the system, all through to where there's fulfillment, all of that process is seamless and can be delivered in a very in a very good way. Now, the other aspect of it is, of course, it's about markets. You know, that the market that you're defining is actually a thriving and a successful market. It's a place that, you know, you can achieve scale. There's an opportunity for you to achieve scale, or even if you are looking at a niche, that it can still support the business model, because fundamentally you exist to serve a customer segment. So you want to make sure that the market is the right fit, your product fits the market, and that the market exists. One of the things that I like to say, it's really difficult to create a market. It's really difficult to say, I'm going to go out there and, you know, change the entire market. There's a huge pioneering cost to that. And so fundamentally, you want to go into a space where there's a higher propensity for people to use your service. I'll speak about the specific regulatory regime we're in Ghana. So maybe going back to banking, we had something called the Branchless Banking Act in Ghana, and that primarily looked at, this is what introduced mobile money in 2008. But prior to that, in 2006, in 2003, we actually had what they call the Payment Systems Act. That's what introduced ATMs. It's amazing. These things only came recently. Today they are commonplace, and we think that they've always been there.